Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we start with Asian equities. They traded mixed on Thursday, with Sydney and Tokyo coming under pressure as their local currency strengthened against the greenback. Japan's Nikkei 225 index declined to a near one-week low as the yen hovered at the low end of the 119 handle. Australia's S&P 200 index also closed down on the back of a broad-based sell-off sparked by worries over a strengthening Australian dollar. Among the best performance were the Australian dollar that broke above 81 US cents for the first time since late January. Its New Zealand counterpart, however, rallied to 0.7552, a dramatic turnaround for a fall to a two-month through of 0.7318 early in the week. The Kiwi was given a further boost after local retail sales posted a record 2.7% jump in the first quarter, blowing analysts' consensus of 1.5% increase and any thoughts of a near-term interest rate cut. The US dollar languished at the three-month low against a basket of major currencies early on Thursday after surprising soft retail sales prompted investors to wonder if the Federal Reserve can afford to hike interest rates at all this year. Against the yen, the greenback slid to a two-month through of 1.1903. while the euro came with a whisker of a two-month peak of 1.1392 at last week. And of course, while we're at it, European equities opened lower on Thursday on growing concerns of the health of the US economy. The Pan-European Stock 600 index opened down 0.3%. Greece, of course, remains in the focus of markets. The country's negotiating teams are expected to resume talks with the country's international creditors to reach a cash for reforms deal. The Greek government also ruled out rushing to a referendum to secure public support for unpopular reforms, opting instead of a final push for a compromise with lenders by the end of the month. Sterling managed to hit a fresh five-month high of 1.5780 after the Bank of England cut its growth forecast, and of course cautiously financial markets that will only start rates by the end of this year. Gold in the commodity sector hovered a near five-week high on Thursday after kept overnight gains, which triggers the speculations that the Federal Reserve would not rise interest rates soon. Gold ticked 0.2% to 1,220 an ounce this morning, but remained near the high of 1280 on Wednesday. The metal closed that session up 1.9%. What we're looking at is a price gain in near terms, but from a technical perspective, bullion needs to break over the 200-day moving average of 1218 in order for the rally to be sustained. Oil slipped on Thursday as weak data from the world's top economies raised concerns about the outlook for global fuel demand, offsetting data that showed a large drawdown in U.S. crude stockpiles last week. China, the world's top energy consumer, was its economy losing more steam in April despite easier monetary policy, while Europe's largest economy, Germany, slowed in the first quarter. In the United States, we're looking at retail sales were flat in April, dampening hopes of a sharp rebound in growth of the second quarter. Crude stocks in the United States fell for the second week by 2.2 million barrels, following fourth month of steady gains. Even though refineries pared back record seasonal run rates and imports jumped, analysts had expected crude inventories to rise by 386,000 barrels. That's all of the important news for today. Thanks a lot for being with us. See you next time. Bye-bye.